The initial reaction was panic, I think I would say, on both of our parts.
I feel like we had been just flat cheated and lied to. I was really disappointed in the people. I couldn't believe somebody would do that.
He has nothing else to do right now. His cause célèbre is trying to make his case for the courts, ignoring the fact that what he's doing is denying victims' recoveries.
Alan Stanford was once one of the most well-known figures in the world of sports sponsorship and finance, a man whose name was synonymous with wealth, luxury, and success. He was a financier, philanthropist, and the chairman of the Stanford Financial Group, which included a sprawling network of investment services, banking, and insurance companies. In his heyday, Stanford appeared to live the life of a billionaire businessman, a powerful man who commanded respect in elite circles. However, beneath this polished exterior lay one of the largest and most audacious Ponzi schemes in history, one that would defraud investors of billions of dollars and ultimately unravel Stanford's empire. This story is about the rise and fall of Alan Stanford, his fraudulent financial empire, the collapse of his Ponzi scheme, and the catastrophic consequences for his victims. Alan Stanford was born in 1950 in Mexia, Texas. He came from a modest background, but through his aggressive business practices, he managed to build a financial empire that spanned multiple industries, from banking to insurance to sports. His charm and charisma allowed him to establish connections with influential figures around the world, including politicians, athletes, and business elites. He also sponsored major sporting events, including the Stanford 20x20 cricket tournament in the West Indies, which helped him gain international recognition. Stanford's financial career began in the late 1970s when he moved to Antigua, a small Caribbean island, to build a financial services business. He founded the Stanford International Bank, SIB, which became the central hub of his empire. Over the years, the bank grew rapidly, attracting wealthy clients from around the world with promises of high returns on investments, returns that were often too good to be true. Stanford's main allure was his lavish lifestyle and his ability to convince wealthy investors that their money was safe and would yield exceptional returns. He promised annual returns of 10 to 15%, which was well above average in comparison to traditional investments. This, combined with the exclusivity of the investment opportunity and his reputation as a successful businessman, led to an influx of capital into his various schemes. As Stanford's business empire grew, so did his influence. He became a prominent figure in both business and sports circles, sponsoring events like the Stanford 20x20 cricket tournament, which increased his profile in the cricket world. He also gained access to high-profile political figures, some of whom later became entangled in the scandal that would eventually bring him down. Despite Stanford's image as a successful businessman, his financial empire was built on a foundation of fraud. His flagship operation, the Stanford International Bank, SIB, was at the center of what was later revealed to be an enormous Ponzi scheme. Much like the infamous Ponzi schemes before it, the money coming into SIB from new investors was used to pay returns to earlier investors, creating the illusion of a successful, profitable business. The reality, however, was that Stanford had no legitimate investment strategies generating these high returns. He was simply stealing from new investors to pay off older ones. The way the scheme operated was deceptively simple but incredibly effective. Stanford and his associates created fake investment vehicles that purportedly offered high returns, and they encouraged clients to invest in them by promising a safer, more profitable alternative to traditional markets. Some investors were also told their investments were safe because they were insured or backed by physical assets, but these were also lies. Stanford's victims ranged from ordinary people to wealthy investors, many of whom trusted his reputation and the promises he made. One of the most troubling aspects of Stanford's Ponzi scheme was his ability to keep up the illusion of legitimacy for decades. The Stanford International Bank was headquartered in Antigua, which allowed Stanford to operate with relatively little oversight. as the country's financial regulators were often willing to turn a blind eye to the questionable activities of high-profile businessmen like him. As a result, Stanford was able to operate without scrutiny for many years, enriching himself while defrauding investors. Stanford's downfall began when the financial crisis of 2008 shook the global financial system. The recession and subsequent economic downturn caused many investors to become nervous about their portfolios. Some began to pull their money out of Stanford's investments, which placed increasing pressure on the Ponzi scheme. Stanford, however, could not generate enough new investments to cover the withdrawals, and the whole scheme began to crack under the strain. The investigation into Stanford's activities was ignited by a combination of whistleblowers, media reports, and the fallout from the 2008 crisis. Journalists, particularly from the Wall Street Journal, began to probe into the true nature of Stanford's investments, and their findings led to a growing sense of suspicion. Despite Stanford's persistent denials, the tide of investigation and scrutiny was beginning to mount. In February 2009, the U.S. Securities and Exchange Commission (SEC) filed charges against Stanford and his companies, alleging that he had engaged in an $8 billion Ponzi scheme. The SEC accused Stanford and his associates of defrauding investors by making false statements about the safety and profitability of the bank's investments. The case against Stanford quickly gained national attention, and law enforcement agencies from around the world joined the investigation. The SEC's lawsuit claimed that Stanford had raised funds through the sale of fraudulent certificates of deposit, CDs, to investors, promising returns that were far beyond what any legitimate investment could yield. In reality, the money was not being invested in anything productive, rather, it was being used to pay off older investors and fund Stanford's lavish lifestyle. In June 2009, Stanford was arrested in Virginia on charges of securities fraud, wire fraud, and money laundering. He was accused of using investor funds to finance a luxurious personal lifestyle, including extravagant homes, private jets, and yachts. Stanford's arrest was a stunning moment, as it revealed the scale of his fraud and the extent to which he had deceived thousands of investors. At the time of his arrest, Stanford's empire had collapsed, his bank had been shuttered, and his other businesses were quickly liquidated. Investors who had entrusted their money to Stanford were left with little to show for their investments. Many victims lost their life savings, their retirement funds, and their financial security. The scandal rocked the financial world, and the damage was not just financial, it was personal for the thousands of individuals who had been taken in by Stanford's promises. Alan Stanford's trial began in 2012, with the charges against him including the largest Ponzi scheme in history, in terms of the amount of money defrauded from investors. During the trial, prosecutors presented a damning case, demonstrating how Stanford had manipulated his investors, lied to regulatory authorities, and used new investor funds to prop up his fraudulent operations. The prosecution also revealed that Stanford had spent millions on bribes, including paying off officials in Antigua, to keep his operation running without scrutiny. Stanford's defense was that he had been unaware of the scale of the fraud being committed under his watch. He argued that he had been misled by his employees and that the investments had been legitimate, even though it was clear from the evidence that Stanford had orchestrated the entire operation. In 2012, after a lengthy trial, Stanford was convicted of 13 felony counts, including wire fraud and money laundering. The jury found that he had systematically lied to investors and had used the Ponzi scheme to fund his extravagant lifestyle. In 2012, Stanford was sentenced to 110 years in prison for his crimes, effectively marking the end of his reign as a financial mogul.